Welcome. This is Stocks to Watch on BloombergQuint. I am Agam Vakil. We take you through 3 stocks which are in the news and take experts' opinions on what they think about the prospects going forward. Well, today we are in conversation with Siddhartha Khemka. He's the VP and Head of Research at MOTILAL OSWAL Securities. Siddhartha, good morning and thanks for being in. But before I go across,
good morning.
Let's take up the first stock that we want to talk about. That's Industries. The big rights issue is set to be listed on the exchanges, and of course, this will also mean a change in equity as well as a change in price. Siddhartha, if I can get you into this conversation, what's your view on Reliance Industries? Not just the rights issue, but with so much happening with Reliance Geo platforms as well. How are you viewing the prospects of this company, and would you perhaps tell people to invest in Reliance at this point?
Yeah, very good morning, Agam, and to the viewers. So Reliance, if you look at the businesses, so there are the core oil and gas business, which is currently under some pressure because of the global demand environment. However, if you look on the other 2 businesses, which is the telecom and the retail, which is a consumer-oriented business. So the management had clearly laid out in the last AGM that they want to increase this business to almost 50% of the overall business, and that is something that is driving the stock right now. They had a lot of debt on books. They presented a plan to become net debt free by the end of next financial year, but I think the way things look going right now, they will become net debt free within this financial year itself. The fund raised through the various stake sales in Geo that only adds on to the overall the valuation comfort that one has on the overall Geo platform. So net overall view on Reliance is positive on the consumer side of the business. Reliance Geo is among the market leaders in India. They are monetizing the investments that they had done over the last few years. Now it's the time to scale up with the help of some of these large global institutions, for example, Facebook, which will take it to the next leg. The retail business has some challenges in the current environment, given the lockdown, but that also continues to do well. And the oil and gas business, they have some pressure in the near term, but on the long term, again, that continues to do well. So our advice would be for any investors to look to get into Reliance at any dips. We had seen the stock moving up to around 1600 level. Our fair price from a 1-year perspective is about 1700 rupees. From that perspective, any dip will provide a more comfort in terms of entering the stock.
Okay, fair enough, Siddharth. Let's move on to the next one. And we want to talk about SBI Life Insurance as well. From what we understand, that State Bank of India will make an offer for sale of about 2.1% equity, and the floor price set at 725 rupees a share, which is at a 2% discount from yesterday's closing market price, not too far away from where it was trading. But Siddharth, on the whole, your view on SBI Life Insurance, how do you peg it?
So Agam, there are 2 things to look at here. Is the overall view on insurance. That segment got some beating after the budget, where the government had done away with all the exemptions. So we saw some pressure there, and the lockdowns have also added to some pressure with the sales going down, the monthly sales that we saw recently. However, the long-term view on insurance continues to remain positive. That's a long-term penetration story in India that continues. And within the insurance space, there are few players which have consistently done well. They have reported profits and have shown a good growth. So be it ICICI Pru Life, HDFC Standard Life, or SBI Life. The valuations are comfortable at around 725. The valuations would be about 2 times the FY22 embedded value, which compared to someone like an HDFC Standard Life, which trades at a much higher valuation, looks attractive. So overall, this looks like a good company and a space to be in.
Okay, so that to talk about the final stock we want to address, we have Trent, which is in the news. And Trent is in the news because of its joint venture partner, Inditex, which runs Zara and more. Inditex is planning to increase Zara's presence in India, from what we understand in the latest, according to Bloomberg News. And the new stores will potentially open over the next 12 months. And from what we understand, is the company will have at least 4 or 5 more properties that it has signed up deals with as far as mall developers are concerned. But Siddhartha, even if you leave just Inditex aside, on the whole, West Side has been doing reasonably well for something like Trent, notwithstanding what's happened with COVID. How do you see Trent right now? We also seen a little bit of a run up of late. What's your view here?
Yeah, Agam, so there were definitely concerns once the lockdown were placed in. If you can note that most of these outlets are in malls which are still closed. It has opened up in some cities, but largely remain the malls are closed in the metros or the larger urban areas. So that concern continues. But if you leave aside the COVID period, the company was doing good. The growth in West Side has been good. There are some of the other outlets like the Zudio, which is a new format where the growth has been pretty high given the smaller size, where the expansion is also taking place. Now this JV with the Zara also helping on to improve the overall growth. We believe that the apparel sector may take some time to recover, and the growth will be witnessed at a later stage. Hence, the current year numbers could be under pressure. However, looking at the overall trend, we see a good growth improving in FY22, and thus we maintain our positive stance on trend on back of the growth in the flagship stores, that is West Side as well as the Star, which provides the stability to the business, and then the newer brands such as the Zudio and Zara, which add-ons to the higher growth. So overall, we believe it's a good stock from a long-term perspective. One can definitely look at. We have a target price of around 610 from at least a 1 year perspective.
Okay, so that let me conclude by asking you about if you're finding any interesting ideas in markets, anything that you'd like to talk to us about.
Yeah, so if you look at the markets, the current fall that we are expected to see today, and the overall general slowdown, it's a good time to look at some of the value picks, especially there is a lot of talks, especially on the PSU side. So one space which we find attractive within the PSUs is the oil marketing companies. Recently, last weekend, we saw them raising prices with the rise in the global crude oil prices. So there was a concern sometime back about the profitability of the marketing margins after government had raised the excise, and that was not allowed to pass on. So we believe that this rising of retail prices will help them come back to the normalized margins over a period of time. The cash flows continues to remain very robust for some of these players. The bulk of capex is behind, and dividend yield also offers a good comfort. So within the oil marketing space, we like Indian Oil Corporation, which is our preferred or the top pick in the oil marketing space.
Okay, so that we leave it at that. On that note, thank you so much for joining us and through those stocks which may be in focus today. And with that, it's a wrap.
Most welcome. Thank you.
Stay tuned to BloombergQuint.